morning, traders. This is Blake Morrow with ForexAnalytix, and I want to welcome you to the week ahead video. And this is for January 14th, 2016. Hope you guys are having a great weekend, and for those of you in the United States, I hope you're having a great long weekend. Before I start on this week's analysis, I wanted to say that we just have a couple of days left of the New Year's offer, and you can see it right here in the middle of the page. It is buy 1 month, get 1 month free, or a 25% discount on a semi-annual plan and a 35% discount on an annual plan. And, we don't bring these offers that often, and an offer of this magnitude probably won't be seen the rest of the year, or maybe once. I don't even know when. But if you had been on the fence about utilizing ForexAnalytix or trying it out, this is the time to do it. And it does expire tomorrow on January 15th. So make sure you guys take advantage of it. And once you do that, make sure that you download the mobile app. You can just go to the Google Play Store or the App Store. This way you get all the notifications. I actually get them on my iWatch as well, in the afternoons and evenings when I throw on my iWatch when I go to the gym. If I have anything that breaks support or resistance, or a new update, it goes directly to my wrist, which is really cool. But anyway, take advantage of it. We got great technology, obviously, great group of analysts, and you get to see all this each and every day. So let's talk a little bit about the dollar. Obviously, the dollar just got destroyed last week. We closed at our lows. The euro dollar closed at 122. It it surpassed where I thought it was going to go. If you watched last week's video, I was expecting a move up towards the 121.67 level, which is, you can see here, the 50% retracement. And if you go over to a weekly chart, it's a 50% retracement of the 2014 highs right here to the lows that were posted in 2017 and at the beginning of the year last year. And I thought we were going to make it up here. We have, and we surpassed it. Now, it's tough for me to read too far into the price action going into a Friday afternoon, because we were just basically taking out stops all the way up. And when it's a Friday afternoon, there's not a lot of liquidity. You get into situations where no one wants to stand in front of the market. They're like, well, why am I going to sell it here? There's no reason to sell it. It's on a Friday afternoon and there's no one selling, so I'm not going to sell mine. So we just extended further and actually blew out some stops above 122, even after the U.S. equity markets closed. I'm going to be watching price action very carefully come the FX Open, especially because it's a U.S. holiday. And when you get into a weekend, a lot of people kind of get their bearings straight again, and because it's very emotional as the markets open. But after a weekend, or especially a long weekend, you get people thinking about what they're doing. And I'm not sure if the market's going to stop here, but what I am looking for in particular is if the euro dollar comes back and breaks through 121. Now, 121, remember, that was the breakout point. That was the you can see this little, all the resistance through here. It's 120.90. I don't necessarily know if we're going to go back and retest that at the open during the Martin Luther King holiday on Monday, when North America is not around. But it's something that that I think if we dip to 121, that's going to give an opportunity for those of you that missed the move higher to at least re-enter from a good risk reward standpoint, if that's what you want to do. Or if we break back through 121, sometime, whether it's Monday or Tuesday or Wednesday or whatever, that it gives us the opportunity to recognize a false breakout. That's a very good potential. Now, we just released a blog post, and if you have, just while you're on ForexAnalytix, just go ahead and click where it says blog when you go to our homepage. You can read the latest blog post that myself and Steve Vulgaris, we wrote it together. It's right here, and take a look. All right, I'm not going to go through it right now, but I am expecting U.S. dollar weakness to ensue, or to continue, throughout 2018. I am not, in short, I'm not expecting it to be one straight shot either. So with that being said, what could strengthen the U.S. dollar? I've been sitting there asking that question for the last several months, and I really haven't come up with any good answers. However, okay, I'm going to pull up a chart for you. It's not a chart that we follow on ForexAnalytix, although we do follow something very similar. But this chart is very clean, and this is the Dow Jones Industrial Average. And I want to show it to you because it may play into the FX market sometime soon. Okay, so here's the Dow, and this is a weekly chart of the Dow, and it's going back all the way into the 70s. All right, we are obviously in a situation where we're in the euphoric stage of the market. It's a fool's game to try to fade the market, the stock market, and it has been. I tried it personally a couple of times last year, and just got run over like a freight train. Sometimes it was a little challenging and made a little bit of money here, and then then when it just blasts higher, it's impossible to do. And just from a trading standpoint, I tried a couple of times last year. It just didn't work. I think I actually lost money in the process, even though I did make a little bit of money at some point throughout 2017 in some of this chop, but it was very difficult to do. And to guess where it's going to go, I have no idea. However, what I will point out to you, and the reason why I'm pointing this out to you, is because we are at a very, like I said, a very euphoric stage. I have no idea how far we're going to go. However, on a weekly basis, the relative strength right now is trading in the high 80s. We haven't seen a relative strength reading this high, and you can see this right here, this dotted line, ever. Well, the in the data that I can compile right here, using trading view charts. Okay, and this goes back to 1970. We are obviously in a place where at any moment the market could reverse, and I'm not saying it's going to reverse this week. I'm just saying that we have to be now on guard, because if there's any reason that the dollar would actually start to strengthen, and it's something that those of us that were trading in 2007, 2008, 2009, 2010, one of the things that as FX traders we realized quite extensively through the financial crisis is when the stock market becomes scared, or people or investors become scared, they start looking for safe places to put their money, and one of them has always been the US dollar. Now, I don't know if that correlation is going to come back to life, because we haven't seen any type of risk aversion in the stock market for for obviously quite some time. I mean, the last time was maybe a little blip here in 2016, but we've been pretty much moving higher for the last couple of years, so we don't know. However, if the market starts to come under some pressure within the next couple of weeks, is that a reason for the dollar to strengthen? It could be. And even though I don't see it right now, and one of the things that scares me too is bonds are breaking lower, and we do cover like the 10-year, and we cover boons as well. And I'm going to take you over to the 10-year. Let me find it really fast. I might have skipped over it. How come I don't see my boons and bonds? Do I keep skipping over it? Oh, there they are. They're right there. Okay, right in front of my face. Boons have broken lower. Okay, you take a look at the bond market. Oh, that was the bond. Sorry. Now let's go over to the boons. Here's the boons. Boons are breaking lower. Okay, but we got a little bit of a lift on Friday. Okay, and if the bond markets, start firming, that could be a signal after just prolonged sell-off here, and here's the 10-year. That would be a pro if they started bouncing, that might be a signal that the stock market might come under a little bit of pressure. Now, will it influence the FX market? It could, but what we have seen is we've seen the dollar drop while bond yields have been moving higher, which is interesting. And if we see the opposite of that, and we see the dollar strengthen and bonds strengthen, not and when bond yields are going down, that would be, to me, a signal of risk aversion, or the market's looking or starting to get a little worried about the current situation. Now, I bring all this up because I'm looking at the dollar we closed. Here's the dollar index. We closed at a low. All right, here's the let's go over to a daily chart. You can see we closed at a new trend low, but will that sustain? And in the first couple of days, as the market opens, be it Monday or Tuesday, even though it's a U.S. holiday, if the dollar ends up putting in a false breakdown, I'm trying to figure out reasons why it would actually bounce. And really the best reason that I have out there is, after seeing such a prolonged move in the stock market, if the stock market starts to pull back, will that give the dollar some attractiveness at these levels? All right, because if you take the whole week and you look at what's happening this week, we have on Tuesday, we have UK inflation data. We have the Swiss National Bank chairman is speaking. Jordan is speaking on Tuesday. On Wednesday, we have the BOC rate statement, which we should look at the Canadian here in a moment. But we really don't have any U.S. data until Thursday, and Thursday we have building permits, unemployment claims, and really that's it. So we don't have a whole lot of data that's going to be a market mover, but I'm trying to look for other reasons why the dollar might actually reverse. Now, is the dollar reversal going to stick even if we get a bounce? I don't think so. And as far as I'm concerned, if you take, and let me take you over to a dollar index that I've drawn up here. If you take the dollar index, and as long as this, if you take a look at this downtrend line here that comes in from the highs that were of 2017, okay, all the way down, and it's this blue line right here. And as long as this blue line is intact, this blue trend line, then the bears are in control. And even if we do get a bounce, as long as we stay below 93 in the dollar index, it's bearish. But is there a risk of a bounce after this type of sell-off? There is. And you have to be careful of a bounce. And if we do get a bounce, it might be a week or two that it gives us some better levels to be short the US dollar once again. But I just want to warn you that I think the dollar selling could be a little extended, but we have to see price action at the beginning of the market or at the open to see if we're going to get a continuation or not. I think we closed at a very very weak level, but also the lack of liquidity on Friday I think got us there. Anyway, my name is Blake Morrow. You've been listening to the ForexAnalytix week ahead video. If you like this video, make sure you click the thumbs up button on YouTube, and make sure you subscribe to this video so you never miss any of our intra-week updates, our midweek updates. You don't miss any of our great interviews that we do each and every day on our free webinar. And also make sure you take advantage of the offer with ForexAnalytix. And remember, this is the New Year's offer that does expire on the 15th or on Monday. So thanks guys and gals for listening in. My name is Blake Morrow. Have a great trading week this week.